Mic test. Hello, guys, and welcome to the 87th edition of Trading Opportunities webinar. This is Nirav, and give me a few moments while I check the microphone and everything before proceeding with the actual content here. Hello, hello, hello. Hello, mic test. Yes, it is working. So, guys, now that technicalities are all checked down, so I would say welcome to the 87th edition of the Trading Opportunities webinar. My name is Nirav, and before we proceed with the actual webinar, let me just very quickly run down the legal disclaimer here on screen now, suggesting that all content presented here is for educational purposes. I'm not soliciting buy or sell. If you go on to use the views presented here for your trading or investing, you yourselves will be liable for your profit, loss, or loss of profit. With the legalities out of the way, let me give you a very quick introduction before beginning the webinar, guys. My name is Nirav. I'm the admin and owner of the website as well as the YouTube channel 50 Eyes Market Analysis and 50 Eyes.com website. This webinar is the 87th in our series of trading opportunities webinar. We conduct them every Friday at 2 p.m. GMT and 7:30 p.m. IST. So just convert it to your time zone, right? Next up, this webinar is currently being broadcasted live on YouTube as well as LinkedIn. So those of you who are watching on YouTube as well as LinkedIn, we are monitoring the chat, and we will be answering whatever you ask on either of the platforms, right? I can already see YouTube has some comments here. Let me see one more thing. Yeah, right. Next up, with the introduction, here is the website. All these articles and what do you call webinars are published here as well after being broadcasted live. You can go and check that. And one more important thing, for the last 5 6 years, sorry, 6 plus years, I have been keeping a track record of all these webinars and videos that I publish, and they are all publicly available and verifiable. This is the track sheet. 2016, we had an accuracy of 83.34%, 17, 87.5, so on and so forth. You can see we have had an accuracy above 80% and going as high as 90% plus over the years, making it 80% plus accuracy for 6 consecutive years, which is above industry standards. Since 2022, we started doing these weekly webinars, and for them, we have captured 149 trades in the last 85 webinars. We will check what happened with this last webinar in our current broadcast. Lastly, if you want to get more of my updates and trades, you can request details for the private Slack group by heading to 50s.com/contact us. We will get more of that as we go along in the webinar. And the way we will proceed in the webinar is, first we will discuss the charts of Euro USD, followed by crude oil, gold, S&P, Nifty, and in the end we'll discuss Bitcoin. So with that out of the way, let me see where is the chart of Euro. There it is. So with all the introductions out of the way, let's now begin our discussions. So here on screen, you can see the chart of Euro USD. We'll begin discussing what is currently the view on it by first checking what was the view on it in the last webinar. So I'm just over on my YouTube channel. Under the live section, we'll just check out what happened in the 86th discussion, which was done on October 27th. So on October 27th, let's see Euro USD. By the way, all of the charts are timestamped. So what you can do is just go over the webinar and scroll through it, right? On the timeline, let me just show you by doing it. So if you scroll on the timeline, you will just get to Euro USD, then gold, etc., and so on and so forth. So it makes it very easier to navigate. So let's just first quickly check what happened with the euro last time. So I'll just turn that quality to 1080p, and so it's easier to check. So this is the recording. As you can see, we are in the 86th live broadcast recording. And what our analysis in the last webinar was that we are looking at a possible zigzag in progression and wave A up, a wave B down, and wave C up. And a zigzag is basically a structure which looks like this, as is drawn on this left hand side area. Once the wave B down is complete, we are always going to have a wave up which will take out the high of wave A, right? So this is the expected progression, and you can already see the rough outlook I was expecting was that this market will head higher. This is, by the way, all from the last recording itself. Now the price when we did this analysis was at 1.0587, and let's see what happened on the actual chart. So this is the actual chart. So this was the price somewhere over here. Actually, it was actually over here, right? And the idea was, one second, let me just quickly reference the exact time as well. There it is. Yep. So this was the discussion from 27th October's webinar. The market did go up as per our analysis. However, it did not go precisely as expected. It did not take out the high. We saw a continuation of the wave C, and then the market is heading higher. And we were actually able to capture multiple long trades in this leg. They were all posted in our Slack group. We'll have a look at it later. But for now, let's head over to this current chart and see what this market is doing. So right now, what I'm seeing over here is the continuation of this zigzag kind of structure, which we expected and discussed in the last webinar. Now, those of you not much familiar with the Elliott Wave analysis, which is a form of or what you call advanced form of price action analysis, what we have over here is a structure which should look like this. So our first leg up, A is complete over here, correction down is complete over here, and the next leg up is C. Now, in an Elliott Wave terminology, this wave A and C should have 5 waves inside of them. It could be an impulse, could be a diagonal structure. So if we basically magnify this wave C, we should see a structure something like this, which could be counted as a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up. Now, in this particular case, we have the 1 up over here, the 2 down over here, and this is the 3rd up. So basically, once we see this correction getting completed over here in the 4th leg, this will again present us with an opportunity for a wave 5 long. And once this wave 5 is completed to the upside, we will have an impulse complete in the other direction. So this will make it a completed zigzag pattern. So if I were to remove some of this stuff, what I'm basically saying is that we have one leg up remaining. And once that one leg up is complete, the wave C will be completed. And after that, correction can ensue. We will look at things at that point in time. The current idea is that we will see some bigger downward movement. Of course, things can change, but this part, one more up leg remaining, is what we have to check in live market. So now comes the part of trading strategies. How will we be able to capture this leg or capture this movement to the upside? And by the way, let me just very quickly check on LinkedIn also, where this webinar is broadcasted live, if there is any comment from LinkedIn. One quick moment. Yes. So on LinkedIn also, it looks like the broadcast is going on. All right. So yes, as I was saying, now the question comes down to where is this wave 4 incoming and how will we be able to spot the completion. Now for that, we will have to go with the fractal nature of Elliott waves. Let me just remove all this and magnify inside it. So far, it looks like we may have one more leg up for this wave 3, because this looks like the 1 up, 2 down, 3 up, 4 down, and 5 up. So I will not be able to discuss precise levels for this correction. Let me just put it on the actual chart here. What we are basically seeing is an impulse heading in the upward direction. That is what we are assuming this structure to be. Within this impulse, we are currently in the wave 3 position, and within the wave 3 position, we are waiting for the smaller wave 4 correction. Now, this can be very easily represented on the right hand side. So this is your wave 1 up, this is your wave 2 down, and this is your wave 3 heading in the upward direction. And as I just mentioned, within this wave 3, we are currently in this position, right? So a small correction and then one more upleg is expected. We can figure out potential reversal level for it, which is coming around the price level of 1.06904. So somewhere around here, I'm expecting that the market can go a little bit sideways. If I remove all this, I can explain it better. So yeah, somewhere around here, we can expect the market to reverse and go sideways for wave 4. Once the wave 4 is complete, we expect the upside movement to continue. So this is our take on Euro USD right now. Let's see how this market proceeds. If we see a move deeper than this marked level, actually what I'll do is I'll just type it down 1.069. So somewhere a little bit above, a little bit below the market can stop. But if it goes way too deep, then we will have to analyze this market again and see what it is proceeding as. Right? It may be that it's doing something else at that point. So for now, this is our expected progression, I should say. More upside expected on this counter. So that was about it for Euro, guys. And as we discussed, our last analysis for upside movement also worked out. And if you guys have any questions on Euro, you can just type that in the comment section. Otherwise, we'll move over to the next chart of crude oil. Hello, Prashant. I can see you and your comment here. I'm not going to tell you where to buy or sell crude oil. Sorry about that. You can see the disclaimer is there for a reason, right? What I'll do is I'll just discuss the chart of it. Okay, so with that, now let's head over to our next chart of crude oil. There it is. Now, crude oil again is one of the things that worked out precisely as we discussed in our last analysis, right? For that, what I'll do is quickly head over to our last analysis and just show what we were discussing here before moving forward with this current analysis. So here is the last recording of the 86th webinar, and somewhere around here, yeah, there it is. So this was the view. Yeah, this should cover it. So this was the basic view that I was expecting two things here. First thing was that either it was continuing as a triangle, which will then be followed by downward movement, or if it was some other structure, it can just continue sideways within this box range of 87. Let me just zoom in. This is still the recording. I'll just pause it. within the box range of 87 to 83.227, right? So once the market has completed its corrective pattern within this box range, we expected that the market will then fall lower, right? Now let's see what happened here. And just keep in mind the analysis was done when the market was trading around 84.2 or 3, something like that. Sorry, 84.9 is visible here. So sideways and then followed by downward movement. So this is the chart, 27th October, 84.9. The market was basically here. I'll just draw it with a circle here, right? And after the analysis and the box range and everything, the market did fell down. It did continue a little bit further in the box range, but then it did break it to the downside as we discussed. And of course, the minimum downside target was 81.78 or whatever, this low basically. And as you can see, this low was already touched, and this is where the market started taking support. So this is another one of the analysis which worked out precisely on crude oil, right? And again, we were able to capture some trades here. And as a matter of fact, I was trying to add some sell trades here, which I had to close, and I'll possibly look to re-enter them very soon. Perhaps I can just quickly see if there is something worth showing here. So give me a few moments here while I quickly get over to our Slack group here. So this is the Slack group where I continuously update my market analysis as well as my own live trades. And as you can see, since what is this, October 27th, yeah, there it is. This is when we did the last analysis. We have been continuously updating the analysis with the chart posts and the live trades as well. Added shorts, stop loss hit, positions auto closed, re-entered scalp shorts, booked profits on shorts, so on and so forth. You get the idea. Whatever the case is, profit loss, whatever, we discuss it very clearly in this Slack groups, or I should say Slack channels, because we have channels for all these major instruments that they trade, right? So if you want to be a part of this, then as I mentioned earlier, you can request details by heading over to our website 50hours.com/contact us, requesting details for Slack private group. Now coming back to the analysis, the last one played out. Now let's see what's happening in the current one. Now here is the small issue that I had with this analysis. I was short somewhere here, but then the market went up and traded above this channel, this yellow channel line, right? That is the reason I closed out the short trades. It is possible that we were seeing a false break to the upside, right? But generally, it's a sign that something might be incorrect in the analysis, or it could actually be just a false break. Now, the only way to verify really is to see the market again going lower than the last recent low or the last important level, which is coming around at 81.249. Let's just say 81.25. So below this, it triggers shorts again. And let's discuss the idea here. First of all, we have an wave A up, B down, and C up. By the way, keep in mind we are doing the analysis from 81.72 and the date is 6th of October. This is our point of reference, which is basically the starting point of analysis. And from here on, we have what looks to be a flat structure, right? Now, a flat structure will actually, we can actually consider this as a zigzag as well. But yeah, let's go with the flat structure first. So flat structure would something like this. This is just the rough outlook of flat. The first leg up, this part, I can just change the color for it. This part is called the wave A up. The leg down is called the wave B down, and it will generally take out the starting point of wave A, which it has, as you can see, already done, right? And the next leg up is called a wave C, which will then be followed by another continuation in the downside. So this is the rough outlook for the flat structure. Now, where are we in this structure? We have completed the A. We are progressing within the B. And within the B, I just realized that it is possible that we have a diagonal information here. And this is just going to go up for the wave B of that B and then a down for the C. So what I'm going to do is I'm just going to plot it on the actual chart. Let me see if we have a clear template here. There we have one. So this is one of the ideas that I just realized might be playing out. And let me take in the targets already, which we have plotted. Okay, it was already plotted here. So this is the rough outlook we expect for the wave B to follow. Again, keep in mind the idea is that we are looking for a flat structure. This is the wave A up, this is the wave B down, and there will be a C up. So within all that, we are in the A up, we are currently within the B down. A up is already complete, we are in the B down, and within the B, we will have a zigzag structure, which I am marking using the yellow color. And here, this is the zigzag structure. Right. And we are expecting that this may be a diagonal in play for A, correction for B, and then down leg for C. Now this changes things not much, just that the wave B correction can continue. Actually, wave B can go a little bit further up as well than this small leg I've drawn. It can go and challenge 87 as well. So that is something that remains to be seen. But once it is all said and done, we will again see a downward movement. Hence, this alert sustains the one near the lows. So long story short, on crude oil, downward movement is incoming, and we are looking to create downside plays, but only after the completion of this wave B correction in the upward direction, right? And for those of you who want to know the exact pattern, we are currently considering things as a flat, and within the flat, we are within the wave B, which is always a zigzag. I should not have said always, it isn't always a zigzag. But in this case, we are expecting it to be. So if I had to conclude it, we expect small upward movement or a corrective upward movement, I should say. One second. Corrective upward movement to be followed by a big downward movement. So strategically speaking, we are looking to accumulate swing shorts. If we can figure out the end of wave B, we can directly enter shorts at that point. Otherwise, we can look to trade the breakout of this channel. We can create the 0 to B channel and look to trade the breakout, and so on and so forth. Multiple strategies will come into play. But that's our take for now, right? And lastly, if you can afford it, there's another strategy. A risky one is to simply add some shorts here. If it goes up, add more shorts here. Let's say add 1/3 here, add 1/3 here, and then add the remaining ones on the way down or at the break of the wave halo. So that's our take on crude oil. Small correction to the upside followed by downward movement. And what I'll look to do is I'll look to add some shorts to this market. Actually, I'll look to add some shorts if it goes below this trend line itself. So there was a rather detailed discussion on CL. Before we move over to gold, let me know if you guys have any doubts or questions. So Prashant, I think this must have been able to clarify your question, right? And it looks like asking for a 50 as group, but with what is the process? So as I mentioned in every webinar, live and recording for 28 seconds. Is it working or what happened with the stream? Let me check one thing, guys. It's showing me different time. Can anyone confirm if the stream is working fine at your ends? Because what I'm seeing is a possibility of the stream going offline for a few moments. Let me check at my end. Well, it's working, but it's weird that the sync has turned off. Anyways, so yes, as Prashant is asking, I'll just answer very quickly. You will have to register nowhere. You will have to just actually contact me 50s.com/contact us. Select requesting details for Slab group, and then I'll provide the details and the process of how to become a member. That's simple as that. I don't know where you have registered. Maybe you're talking about the emailing list. That's just for general updates. All right, Prashant. So with that, I'll just now move on to the next chart, which will be the chart of gold. And again, if you guys have any questions or queries, you can just type them in the comment section in the live chat only. So I'll remove all this clutter and just discuss this chart of gold here. Another question. Retracement of wave BFB levels. I'll just check the retracement for wave B. What's he asking? Let me just very quickly check. Oh, wave B of the Fib. Well, we do expect that the wave B will go to 50-60% retracement level, which will be somewhere here. But it's just expectancy. It does not have to go there always. And that is why I said that the market can roughly go to either 87 level. So in situations like these, you don't really need exact numbers or anything. You just measure the 50%, just the half of this whole leg down. And as I just made a guess, it will be somewhere around 87, which it is. So if you are going to be expecting precision here, the 50-60 is coming between 86.20 to 87.445. But that's just an expectation. It can just reverse from where it is right now. Well, actually, as a matter of fact, it is going down fast enough. What I'll do is enter partial positions on the short side and add more later on. So just give me a few moments. So what I've done is added some partial shorts on crude oil with the idea that if the market continues the movement to the upside, I'll add more. And later on, we expect the market to go down. Expected targets, expected 78 is an expected target, and there is another one before it, 79.5. So this is the way we are expecting this market to progress, right, guys? So with that, let's now head over to our next chart, which will be the chart of gold, right? Because we have actually done a lot of discussion on crude oil. It has taken way too much time. Gold is one of the analysis which worked out like literally precisely as expected. Now what I'll do is Very quickly, I'll just go over and show you what our discussion was in the last webinar. So there it is, the chart of gold. So this is the main idea which we discussed in the last webinar. We were expecting the market to proceed upwards for a wave Y, right? And the discussion, as I said, was in 27th webinar, sorry, 27th November webinar. Now let's look at what really happened on the actual chart. So this was the market 27 November. Let's check one more thing here. We are on a smaller time frame here. Okay, this analysis is here. This is the analysis I'm looking at. So these are the markings in the last webinar. This is the W, this is the X I'm marking, and this is the Y. Now, needless to say, it went up precisely and even touched the expected targets within the resistance zone. Right, this one not only followed the upside with the target, it followed it with the exact structure which we were expecting on this counter. Okay, so again a plus one, again one of the analysis that we discussed in the last webinar played out precisely as expected. And this goes on to show, because with euro, crude, and gold, now we have a tally of 3 trades which we discussed in the last webinar, and 3 trades which played out precisely. We have a tally of all the free things we discussed worked out. Just goes on to show the value of the free content we are putting out here. So guys, keep in mind we do go live every Friday at 2 p.m. GMT and 7:30 p.m. IST. Now here we are on the chart of gold, and let's look at the analysis. Is this the updated one? Let me just refresh it and see. Yeah, there it is, the updated one. And here is also some issues here. Sometimes when I do the analysis here, I'll find that it is for some reason, as you can see, just now it was showing the hold red channel in different angle. Now it's a different angle. It just sometimes keeps a copy of the past analysis for some reason. So this analysis was posted live in our Slack group, the A up, B down, and C up analysis. As you can see over here, we posted it today itself, that we are expecting and wave A up, wave B sideways correction, and then C up. And then the market has gone and done that literally. It actually exceeded our expectation. Now let's look at what's really happening here. Two scenarios that I can think of here for discussing any of those. I'll have to go over and discuss things from the get-go. One second here. It looks like there is a problem with the stream because it keeps updating the sync. Okay. Yeah, sorry. It looks like I'll have to check that at my end later on. So, but leaving that aside, what we have over here is the point of reference at the price level of 1810. Date is around 6th October. And from here on, what we have is an impulse in the other direction. The impulse ends here, which is the price level of 1996. At this point, we discussed that we have a strong resistance between 1998, I think, to 2040. I recall the upside very clearly. And this is a multi-year resistance. I'll just quickly show that on the weekly chart just to make things clear. So this is what we are talking about. This is the multi-year resistance. The price has always come within this zone and then seen strong sell-off, strong sell-off, strong sell-off every time. So could not have sustained. Now, and as I mentioned, like 2 webinars ago, I think in the 85th webinar or 84th maybe, that this time there is a high chance that this market will just break through it, and this can lead to a strong impulse in the other direction, right? So that's what we are discussing here, but on the shorter time frame. So now let's head over to the 1H and see things on the shorter time frame. Now, as I said, from this point of reference, we have the wave 1 complete here. The wave 2 is either complete here, which will mean that this new strong up leg is already in play. But things are not always that simple. Keep in mind, we are already within a multi-year resistance. 1998 to 2040, we are already within that range. We are currently trading around 1994. So it can give a bigger pullback. So let me just show you on chart what I mean. It can give a deeper pullback like this. So this will be to take out all the weak hands who are uh, holding longs, I should say. And once those weak hands are out, maybe with this deeper pullback, if one exists or one forms, then we can see an upward move. Obviously, it can also fly high from here as well, given this analysis is working out. Now, how do we differentiate among those things? As I said, one possibility is that the wave 2 is complete here and we will see the next leg up. For that, I have quite simply placed the alert above 2006. If the market takes out this alert, then I'll add small amount of longs. Keep in mind, this is a place where I have to be really careful because my position entered here could still need some adjustment, as I said, because this market can just sustain within this range, go up a little bit, down a little bit, and then form a deeper correction maybe. It's unclear, right? It's a multi-year resistance, so I will not go all in here. Systematic sizing is required here. So yes, coming back to the point, above 206, I will look to consider adding longs on this counter, right? Second possibility, which is the interesting one, which I want to discuss, is the possibility that this is just the wave A of the wave 2, and this is our wave B of the wave 2, which will then be followed by a deeper correction. It could just be the B complete here as well. And it is possible that this was the deeper correction which is already in play. What I'm basically talking about here is a flat pattern, three legs down called a wave A. As you can see, three legs down, A, correction up, B, or a corrective structure up, I should say B. And then once the B is complete, we can see this bigger fall. So here the situation is that we have to be very careful on both sides. Pullback, if it happens, it can be deep. If it does not happen, the market can just fly high and you can just miss the whole opportunity altogether, right? So what I can do is just discuss the scenarios which I'm thinking, and as I said, upside I'm more biased. But again, I'll just enter with smaller positions first, and as my confidence level grows, according to the price movements I see, I'll look to add more. And the counter view is deeper pullback first, and as such, I will not be interested in holding it from 1992 to 1920. That's a rather big movement, so that's why I have not entered anything yet. Long story short, on gold, guys, the idea is we are looking for swing longs once the wave C is complete, right? We do not have the confirmation for wave C. It is possible that it's already complete here at the price of 1972 on first 2nd of November, sorry. And if it's not, then it can just continue deeper. To avoid this situation of hanging on to a deeper pullback, we can just add longs above 2008, right? But only minor longs because it is also not a confirmation. The market can do a little bit of complex movement within two zero, what, sorry, 1998 to 2040 before moving up. That's my view on gold. Let's now head over to our next chart, which will be the chart of S&P's 500. And of course, if you guys have any doubts or questions, you can just push them in the live chat section. One second. What is this about? Okay. So with that, let's now head over to our next chart and let me quickly check if the stream is working fine on LinkedIn as well. That is going fine over there as well. That's good. So next chart is of S&P's 500, where I actually missed a very clear long trade here. But good point here is that last time when we discussed S&P's 500, let me just refresh the chart here as well before moving forward with this. It just shows the name of the emoji. Okay, so where is this S&P's chart? This is what we are looking for here. It's loaded up now. Before moving forward with our current analysis, let's just quickly head over and check what we discussed on S&P in the last webinar. So we were looking for a triple zigzag correction heading in the downward direction on our 27th November webinar discussion, right? And this is the quick rough outlook which I had, that if the wave Z was already complete here, then we will be heading upward straight up from here. This was the analysis discussed. You can of course check yourselves by heading to the 86th webinar on the YouTube channel live section and just check this whole discussion. Starts around 21, I think. There were two ideas: either waves that has one more leg down remaining or it's complete. Now let's see what happened really. It comes out that the market had actually completed the wave Z when we discussed it last time. I'll just delete this one here because as you can see, this is 27th October and the market started to proceed in the other direction. We did get a confirmation when we had a sustenance above this CN channel or bluish looking channel. As you can see, the market broke it and then took sort of support above it, did not really actually test it. If I were to zoom in, there it is, you can see, broke above the channel, resistance, then broke properly above it, and then sort of tried to test it, but after that sustained above it. Not the extremely classical scenario which we like, which is break and then retest, but it did give signs of strength about this channel. Now, squeezing this chart so as to get a proper idea of what this market is really doing here. What we had over in the longer time frame analysis is that this is the starting point of the analysis 4611 and the triple zigzag just finished over here. Triple zigzag is an Elliott Wave pattern called WXYXZ or represented by WXYXZ. We have been following this for a very long time. Since September, we have been following this pattern. Now, if this pattern is complete, of course, we expect an upward movement, which is what we are interested in right now. And this was actually posted in our Slack group live. Actually, today itself, I made this post. We'll look for longs above 4318, and this was the chart post at 4313. And the market did, as you can see, go up literally from here. Did not even give us the proper pullback, which I was expecting. This is the same arrow, right? And again, just keep in mind, if you want to become a member of this Slack group and get these updates live, you can always head over to our website, 50hours.com/contact us and send request for Slack private group. Now, coming back to the analysis here, which is that we seem to have completed the wave 3 circle. So we are expecting just another pullback before seeing another leg up, right? So basically what I'm saying is here, we are expecting an upward movement on S&P's 500 and this upward movement should come into play without taking out the low of 4309. So if the market sustains sideways above 4309, in the sense that it goes something like this, maybe more sideways, but whatever it does, it sustains above 4309 and then takes off, then we will look out for this breakout trade or even try to catch the end of this correction, right? Why? Because we have one and then two legs in the upward direction once this wave 4 correction is complete in circle degree, right? So long story short, above 4309 market sustains, we look for long swing perspective, long short term. Short term wise, there can be a correct, there is expected to be a correction before the upside. So if I can conclude it, small downward movement followed by two up legs. So swing perspective long. That's our play on S&P, or that is what I believe is the correct outlook for this market. Let me do one more thing and just check if we can figure out the important levels for wave 4. Here we have one coming at 4304, right? So yes, it can go below 4309 actually, but that will actually reduce the strength, or what I should say proper words will be that will suggest that the upside market is losing its strength. Why? Because it's an important level, so we do not expect it to get broken, but technically it can go lower than that. So addition, or what do you call, correction of what we just discussed, market can go below 4309 to 4304, 4300 maybe, but that will suggest a possible weakness in the structure, and I will have to reevaluate the count and see if it still is giving us a long trading opportunity. So coming at the chart, we expect the market's immediate support at 4327. I'll just type it there. Right from there on, we will look for some corrective movement to complete and possible longs. Nothing much to add here on S&P correction, and then followed by upside and then another upside if the things are as we are expecting them to be. So with that, I'll say we have discussed our chart of S&P. Unless you guys have any doubts or questions, we will now head over to our next chart of Nifty, which will be followed by Bitcoin in the end. And before moving forward, I like to point out very quickly that literally all the analysis discussed in the last webinar, the one on Euro USD, crude oil, gold, S&P, and the ones we are going to discuss Nifty as well as Bitcoin played out. So these are all analysis discussed for free, and they are all working out. So basically, long story short is, if you want to become more aware of what the market movement is, do attend these webinars, and you are serious about trading. If you are a full-time trader, I would suggest you look into our private Slack group by requesting details here from this link, 50is.com/contact us. Right. Lastly, if you are finding this content of use of benefit, I would suggest that you share it with your friends, your colleagues, so that they also can derive benefit from this work. It takes a lot of hours and efforts to come up with these analyses and sharing it publicly here. So your help in spreading the word will be definitely appreciated. Okay, guys. So with that out of the way, now let's head over to our next chart. Nifty is 50. So Nifty 50 again, last time when we discussed, we were expecting one more up leg, and I'll just show you very quickly. This is what we were discussing last time. One leg up after a small correction in Nifty. And this is what we have down and then correction, sorry, correction and then upward leg in Nifty as per expectation, right? So again, another one of the analysis which has worked out. Now, what is it really doing here? What is the structure now? It looks like it may be progressing as a sideways movement, perhaps as a B, and in case the wave B is already complete here, then it will just go up So to conclude this analysis, because it is a rather simpler one, it's very simple. If the A is complete here and the B is here, then this market will see one more leg up, one up, two down, three up, four down, five up, right? Counter view. If this is still continuing sideways, then it can see some downward movement for the B. And then we look for breakout trades above this last high for the wave C. So yes, as I said, the analysis is rather simple. If it goes sideways correction, then we look for breakout trades to the upside. If it does not go sideways correcting, then one more minimum up leg is already expected, and it will probably give that with a gap up open in the Monday session, right? So this is the minimum expectation on Nifty, right? I still have a bias that it may be continuing a bigger correction. So once that bias is eliminated by the price action or the further data from the markets, then we will consider the possibilities of strong up move. Currently, I'm not considering the possibilities of straight out up move or a strong up move, and we do not really have to, because short term wise, I've already discussed the upside, right? So nothing much to discuss here. Nifty and minimum is 19328, and the next target will be at the CN color channel or this channel's upward trend line. So you can draw it at your end and then check out yourselves. With that out of the way, now let's head over to our next chart of Bitcoin. A very short discussion on Nifty. Bitcoin is another one which has played out as expected. Yeah, Malcolm it. So now in Bitcoin, the last analysis, I'll just quickly again go over and show you very quickly BTC. So this is the last analysis in Bitcoin. We were expecting that this market is going sideways for wave 4, and then it should take off, and the target was 36,000, as you can see over here. Now it has literally played out. It went up. It literally touched 36,000, like to the point, and reversed from it. You can even see the peak here. So this is another one of the analysis which played out the picture perfectly. Now it has played out perfectly. Now what is it really doing here? So I believe that it is possible, because this wave 4 has already taken a lot of time. It is possible or plausible to count this as the 5 complete over here, which would mean this market can sustain sideways for the 4 and then head up again. So long story short is, in Bitcoin swing perspective, we are expecting more upside on this counter. Now let's do some other calculations and figure out what is the length of this correction that is expected for wave 4. Now the wave 4 correction can go deep if it wants to 33,000, but generally we do not want to see it go that much lower, right? We want to see it stop somewhere around 34,153. What I'll do is I'll just type it in, and the next is 33,000. So these are the expected reversal levels. It is actually, if you see, already at 34,150 level. Now what remains to be observed is some sort of sideways movement here, maybe a flat like this before it heads up, or something else, maybe a triangle or whatever it decides to do. In either case, I have my alert at 36,000, a little bit lower than 36,000. So once this alert is triggered, we'll consider long trading opportunities on this counter. Right, on the downside, if the market sustains above 33,000, it's all well and good. But if it does not sustain above that level, then we may have an issue here. Right. So that's about it for Bitcoin, guys. If you have any doubts or questions on these analysis which we discussed in the live chat, then you can just push them in the live comment section. And if not, then I'll request you to kindly share this content with your friends and colleagues who will find it of immense value, because it takes a lot of time and efforts to come up with this analysis and post it publicly. right? So I hope you do your part, and thank you for being a part, and thank you for staying till the end. Prashant is asking Bank Nifty. Sorry, Prashant, I will not be covering Bank Nifty because it will become a sort of focused market. Previously, I was thinking of doing a separate webinar series just focusing on Nifty and Bank Nifty sort of daily analysis, but we did not seem to have gotten a following in the current webinar series, or not a big following as expected. So I'll hold that off for now. If we see a good amount of people visiting these webinars and requesting such chart updates, then I'll be very happy to come up with that. Right. So again, guys, thank you for being a part. And yeah, that I'll say bye for now and see you in the next one.